Hi, today we would like to talk a little bit about the current real estate market. Doug, what is going on in real estate? I've been looking at houses for nearly a year now, and at all of the houses, there are so few on the market to begin with, and all the prices are really elevated.
Yeah, the prices of real estate nationwide are at all-time highs, higher than we saw back in 2008. And the way we measure that is we look at the price of real estate, and we divide it by the price of the average house in an area, and we divide it by the income of that area. And right now in Harrisburg area, we're running about 5.5. Anytime you're above 5, that's kind of a risky number, but we're not overdone. There's other areas of the country that it's very high. For example, Las Vegas, Nevada is the highest in the country at 9.5.
Wow.
And the other, areas like Reno, Denver, Colorado Springs are all running, 8. They're very high prices to the income of that area. So it's going to be hard to sustain those high prices.
Mm-hmm. Because what you're saying is the people who actually live and work in those areas can't afford to buy those homes at that price point.
Exactly.
So are we seeing more mortgage defaults like in '08?
We're starting to see some, and here again we go back to Las Vegas, Nevada, and they're running the highest default rate of any metropolitan area right now. So we're starting to see that, and that will probably continue.
I feel like in '08 you heard a lot about homes in Florida, and especially places like Florida that had a high number of vacation homes or second homes. Is that the case as well?
Yeah, that's a higher risk market also, because the primary residence will always be protected more by a person than a secondary one. So that's another big area that you got to look at when it's an area of a lot of second homes. They're real quick to default on those homes. Another thing that you need to be aware of, you'll hear a lot about institutional investors buying up rental properties. And although there's been some of that, that's not been the largest part of it. That's maybe where it's common, like in Florida and California and Arizona, they make up 0.5% of all the rental property. The rest is owned by small investors, 10 or less people, or 10 units or less. And those are small investors. Here again, they don't have real deep pockets, so if they get into trouble, they'll be quick to default also. So that makes up a large part of a real estate market in certain areas.
So I've heard the term real estate cycle. Where are we in that cycle?
Well, we're going to show this chart now that shows that real estate goes through a 9.5-year cycle up and a 9.5-year cycle down. And it stays pretty close to this smooth curve that you'll see on the chart. We think we passed that peak about 2 years ago. So I think real estate will continue to go down, and in about 8 years, you'll probably be able to get your house that you're looking for at a good price.
How many years?
8.
8? Wow, that's a long time to wait.
It may be quicker than that, but that's about when we'll see the bottom of the cycle.
Yeah.
So there's another area that you should look at, and that's migration to an area. So let's go back to Las Vegas. About 5 years ago, they had a very high migration rate. A lot of people moving into Las Vegas. That's actually gone down some. They still have people moving in, but not at the rate that they had before. And then if you look at the building, you can actually follow it through stuff that builders file to be able to build. Permits, right. The rate of permit demand has actually gone up greatly in Las Vegas. So we have a situation where there's more building going on than there's new migrants moving in. You combine that with high real estate costs to the income, and that leads to a classic bubbling of the real estate market.
So that's a little bit about what we think is going on in the real estate market currently. If you have any questions, as always, don't hesitate to get in touch.
Thanks.